Start the recording. And all right, good afternoon, everyone. Today is December 19th, 2012. It is Wednesday, December 19th, 2012. Let me go over the results to start with. We're up 36 ticks on crude oil. We're up 21 ticks on gold and 5 ticks on soybeans. All right, those are the markets we traded today. Let's see. If you have not taken a free trial with us, go to www.cfrn.net/apply. Sign up for the free trial. All we need is your name and your email address. When you sign up for the free trial, you get 5 business days in the live trading room. If you signed up, say, today, you would get till the end of next week. 5 business days in the live trading room. To see all the stuff that we have, to actually use it, apply it, do everything you want with it, anything you want with it. Anyway, we'll show you how to download the charting platform. You'll get to try out the charting platform. We'll show you how to download the indicators. I will let you use my layout so that you can load your charts up to make them look exactly like mine if you want. All we need is your name and your email address. Again, that's www.cfrn.net/apply. All right. Anybody who's a partner, reminder, tomorrow night's a partners meeting. Every Thursday night, partners meeting. And if you are on the free trial and you want to get into that partners meeting, you should check in your inbox, your email, and there should be an email from me in there telling you how to become a partner so you can get into that meeting. All right. If you do not have that email in your inbox and you're on the free trial and you want to know how, you can just type in here that you didn't get the email, or you can just send me an email at support@cfrn.net. Just say partner info in the subject, and I'll send it off to you as soon as possible. All right, let's get on with the trades. We looked at the ES this morning, not so much on the 10,000 contract. We did look at the 10,000 contract. We outlined spots where trades were available on the 10,000 contract for guys who were asking this morning. But we actually didn't trade the ES at all today. I had said this morning I would look for a close above this before we start to think about going long. Right now it's looking actually short. It's looking like it's getting ready to roll over. Dwayne was thinking it was going to roll over, and we're going to work our way down to 1432, I think. 1432.33. Something like that. I'll let him get to that. But the trades that we saw this morning in the live trading room on the 4-tick range, there were 4 of them. 1, 2, 3, 4. All 4 were profitable trades, all right, using the 4-tick range and the same setup we use on every single 4-tick range chart. All 4 of those trades that we looked at this morning in the live trading room worked out. All right. I didn't take any YM or NQ trades, but I'll show you the YM quickly. I looked at the YM very quickly. I didn't, the majority of the action was on the like crude oil, gold, the Russell, and soybeans this morning. Okay, so I'll show you some of the stuff that happened in here. Now, after the open, every 4-tick range chart, you're looking at the same exact setup. Okay, every 4-tick range chart. There were a bunch of opportunities in here on the short side and on the long side. Right here is the trend line you're looking at. Right there's a down close. If you took that, depending on what your stop was, you probably would have stopped out up here. I don't know, let's see, 93 up to 303. So you would have had to have had more than a 10-tick stop on the YM. I use an 8-tick stop on every trade that I put on, so I definitely would have stopped out on that if I had taken it. But we would have made it back right over here. Okay, there's the trend line. Here's where you would have gone short, and that went all the way down here. Again, you could have gone short here, taken some profit there, could have gone long there and taken some profit there, using the same exact setup over and over and over and over and over again. Okay, I didn't trade the YM at all this morning, but those were how the trade set up. All right, now I'll show you the NQ. I think I did put a couple of trades on the NQ. At least one of them. There you go. Yeah, I put one trade on the NQ, and it ended up being a break-even trade for me. There were more opportunities, just looking at the trend lines and the divergences and things like that. Over here we had some bearish divergence, but the cycle was going up, so we would have looked for a close down below the trend line I drew on there. Right there was a short opportunity. Right here was a short opportunity. Right over here was a short opportunity. Let's see, looking at the trend lines, you could have shorted right here for the small move down. Bullish divergence right here was a long opportunity for just a little move up. All right. Over here was a shorting opportunity. Right here you could have bought. There was a little bit of bullish divergence here, but we never pulled away from the BBC. So you would have needed to close above that trend line, which happened right inside here. All right, you could have gone long right in there. Now, all these trades that set up, if I'm focused on the YM in the morning, I'll show you where all these trades are. You know, if you ask me to focus on the YM in the morning, because I may be somewhere else trading, I'll definitely show you where these trades are when they're coming. All right. I didn't take any more than this trade right here. I went long on the up close above the trend line. I went long right there, and the reason why I took the trade off is because right over here, the green line was just about up in the cycle, and the swing high was right here. We really didn't have any room to run before it was going to start to pull back, so I took the trade off. Okay, and then it did pull back, and the cycle moved all the way down at the same time. Now, typically in the morning, in the recaps, when I see stuff setting up, I'll tell you how it's setting up. Right here, we have a trend line right here. We don't have any divergence to support the trend line. It's at the point right now where it should actually move down. This is bullish divergence in here, but everything's below the BBC, so it's a little bit messy. But it's at the point right here where the price should actually move down from here. Okay, so if we were to draw, let's say we draw this trend line right here, from the bottom of this bar up to the bottom of the bar that hit the BBC. The down close right there would be a spot where you could enter. And I would think that when this pulls back right here, as it should do, you'd probably end up down here somewhere. Okay, right down in this area. I'll highlight that area. I don't like the way that this trade came together, so I'm not so sure that I would want to trade it personally, but that's probably where it should get down to, right in there. All right, you see we actually have some support dots down there too. Okay, that's my opinion of the current situation with the NQ. Let's jump over to some other markets here. The soybeans. Now, there was a bunch of opportunity on the soybeans after the open this morning. They opened up here at 1032, you see. So we shorted the soybeans right here on this down close below the trend line that I drew on there. All right, we didn't have any divergence to support the trade down here at that point. We did have divergence on this one where it closed down below this trend line. All right, we had taken a short here and we took 5 ticks profit on that right there. We did have divergence here to support the move down, and it did move down. I know we had at least one partner in the room today that did well with the soybeans this morning. Pete, you're out there. I know. He actually, I think he made 27 ticks on the soybeans this morning and 48 last night. I'll show you what he did last night too if you hold on just a minute. But you can see again and again in here we had the opportunities for this thing to move down. Okay, and he took those opportunities. I only took the first one, and I didn't take any more after that. All right, but there were more opportunities in here to trade it. I just didn't take any more. All right, currently, if you're trading the soybeans still, there's your trend line. It pulled back up, tested the BBC, and gave a down close with a little bit of bearish divergence. So you could have shorted right up here at 14.51 quarter, and it's moved down already a point and a quarter. I would anticipate that it's going to get down here. There's not a lot of room for the green line to move down into the cycle here, but I would anticipate that it's going to get down into that area right there. Okay, but that was the soybeans this morning. Oh, I did say I was going to show you last night's stuff. Let me scroll back there. Let me send it back a little so you can see it a little better. Let's see, last night in the overnight Globex market, there was this move up right here was the start of it, and this is the move that Pete took last night. I know you're right there listening. I see your text in there. This was the short that he took right here. He shorted right in here, and there was another opportunity here and here. But if you just took this one and sold it somewhere down here, then you did pretty well with it all. There were more opportunities on the upside here when it switched back up, and more opportunities on the downside. Right, up and down, all night in soybeans. If you didn't go to sleep last night, if you live on the East Coast, like we do, and you didn't go to sleep last night, then You could have traded soybeans all night. All right. That was the move. All right, so I've done the charts on this screen. Now let me jump over here. I'm going to go to gold first. Okay, no, you know what? I'm going to go to the Russell first because the Russell's easier. The Russell started out great this morning. We had, right at the open, there was an opportunity to short off the BBC right here with the bearish divergence. That gave at least 10 ticks. I don't know how many altogether it gave, but I think it gave at least 10 ticks. It did it again right here and did it again right here. It did it again over here, but this one didn't give 10 ticks. This one would have taken 8 away. You would have stopped out on this for sure over here. Okay, but right here, and right here. An easy 30 ticks this morning, and that was all in the first half an hour. Let's see. Right here, if you shorted this close down below the trend line right here, then you would have stopped out. If you shorted this close down below the trend line, it depends what your stop was. You know, if you entered here at 43.1, it pulled all the way back up to 43.9. If you had an 8-tick stop on it like I normally do, I didn't short it, but if you had an 8-tick stop on it like I normally do, you may have stopped out right here. Okay? Or you may have gotten the 10 ticks on the way down if it didn't fill you at the stop. Right here, you definitely would have stopped out. And then it changed directions. Okay, there was an opportunity right here on the long side, another one right there on the long side. And during this one, I was saying that I thought it was going to get up to at least right here. And then once it got up there and it went through it with some momentum, I said hold on to it till it gets up to here. I actually didn't say 848, I said 847.9 is what I said. And it got up there to 848. Pulled back, went right back up, tested it again. This is the weekly trading zone right here, this horizontal black line. All right, it came off of that. It's pulled back over here now, and it's a little bit choppy. Right in here, you could have shorted the down close after the bearish cross with the bearish divergence. When I call this bearish divergence, I mean the green line is going away from the red line, and it's bearish divergence because the fact that they're diverging suggests that the market is going to move in a bearish fashion shortly. Okay, that's what the bearish divergence is all about. Now that was the Russell this morning, so there was ample opportunity to make, you know, $300-400 a contract on the Russell this morning, pretty easily. Okay, if you just focused on the Russell, it was there for you, and I know we have guys who just focused on the Russell and got that. Gold.
I will be.
Hey, Mike. That's Mike Reed. I don't think he knew his mic was live. All right, on the gold, let's see. Right here was bullish cross. There was an opportunity to get long here and an opportunity to follow up with a long right there. I missed both of those, but when it changed directions here, I started trading it over here. I shorted over here, and I actually got I got out here with. I meant to get a break even on it. I moved my stop to break even, but it slipped me 2 ticks. But I got it back on the next trade right here. I shorted. We had the bearish divergence in the down close, so I took that. I shorted it down to here. It obviously kept going down. Down here, I had drawn a trend line in. Once it broke the trend line because it had so much momentum, I shorted it here again, and I ended up getting a break even, but it dropped another 10 ticks or so. When it turned around and it started to move up, there was an opportunity right here to get in with the momentum. It even had the bullish divergence to go with it. I got out right up here, taking some good profit on that. And over here it started to flatten out, and I got long here, and I got out break even right here. That one chopped around for a little while before it started moving up again. And you can see all this stuff that's happened right here up to this point was in the first hour. You know, there was a ton of stuff happening today. The second hour, I think, was even more busy than the first hour, even though the first hour was plenty busy. It was like second half hour is where the majority of it came in this morning. Let's see, right in here there was an opportunity to get long there, get short there, and all this right in here happens so fast that I didn't even notice it happening. But there was right over here an opportunity to get long. I did get long over here on this one, okay, and I took some more profit on it. Let's see, there was an opportunity to get short in here, take a little bit of profit. if you would have gotten short right here with 8 tick stop, you probably would have stopped out on that. Let's see, 73.3, 74.4. Yeah, you definitely would have stopped out on that one if you did get short on that with an 8 tick stop. And there was another opportunity right in here on the down close with the bearish divergence. You could have shorted in there. On this one, it would have been the close below the trend line. Now we're inside the break period right here, but that would have been okay on the way down. All right, and that was pretty much that for the gold. All right, so we had a good morning on the gold. We were plus 21 ticks on the gold. The Russell, the gold, crude oil. Yeah. The crude inventories came out today, so there was a lot of activity on the crude oil. Okay, you can see some of the trades that we took right there, and see, leading up to it, we didn't. I don't think we took any trades in here leading up to it. We were waiting for the crude inventories to come out. There were some opportunities in here. Yeah, there's another crude breakout right now. Yeah, there is. There is. And where could you get long on this? Well, let's look at that. Okay. You had bullish divergence right here, so you could have gotten long on the up close right there. If you missed that, you could have gotten long right there. If you missed that, you could have gotten long right here. Okay, there's 3 different spots right in there where you could get long on this move up. There's 1, there's 2, and right there is 3. 3 different spots where you could have gotten long on that. Now up here, when you see how the price has moved up so far, and you say, you know what? It's really running. I don't want to get in on it when it's running so fast and far. Take a look down here at the slingshot. If the green line has worked its way up to the cycle, then it's likely going to pull back some at this point, like it's starting to do right now. You see that? So it's better if you have it right here, and there's some room for this green line to work its way up into the cycle. That's the best case scenario. I mean, you can still make profit on these smaller trades like this. I mean, this one went 6 or 8 ticks right there, but when you're in a very high momentum market, like the crude oil has been today, then jumping in on these, you're definitely going to get a fill. You may have to wait for a drawdown to the BBC, because that's what the market likes to do. But sometimes, as you'll see here in just a minute, it doesn't actually do that. Now in here, starting at 9:30, there was a shorting opportunity right in here that really didn't go anywhere. Price turned around, got up above the BBC, and it pulled back down to it. There was an opportunity to get long, and here was some profitable opportunity right in there. All right, I didn't take any of that. It crossed back down, gave a shorting opportunity right in here for another 4 to 6 ticks. Then it crossed back up. Now once it crossed back up right in here, I got to blow this up because you guys can't really see it all that well, I don't think. But when it crossed back up right in here, there was an opportunity right here to get long on it, right there on that up close, right, to take some profit in there. There was nothing right in here until you got an up close. Now the way that the trend line looks over here, going from, oops, I believe something just happened over there. But the way that the trend line looks over here was pretty ugly, so you wouldn't have wanted to do this right here. Okay, probably just stay out of it like I did. As you were approaching the 10:30 period where the crude inventories came out, I typically don't trade as we approach that period, so I didn't. I wasn't really even looking at it. But once it did start to move, there was a draw on the crude oil. That was what the inventories were. There was a draw on the inventory. So price should go up, and crude will often do what it's supposed to do. When there's a draw on the inventory, it should go up, and it did go up. But anyway, we had an opportunity in here. Once everything started moving up, we had an opportunity right here. Where it closed up above this trend line, I got in there and took some profit right here. I was pretty happy with that because I took 8 ticks profit on it, and then it ran a full 60 ticks, right? Right, Eddie? Eddie's typing in the text box right now that he's long on crude right now. But we both got into this one right here. I got 2 ticks better entry than he did, and I got 8 ticks, he got 6 ticks, and we were both pretty happy about that. And then we saw it run another 52 ticks. But rather than be glum about that, I just waited and I got in right here. The next opportunity that it had, and I took 30 ticks out of that one. Okay. There were more opportunities in here. As you can see, I drew more trend lines in, so there were more opportunities. But we traded as much as we had really could right here. The market started going, sideways and moving around quite a bit. In here, there was a lot more opportunity in here. I got to say, there was right here. We had once we started moving down, you could have shorted right there and taken some profit, or ridden it all the way down here. Shorted again in here, and again in here. And let's see, where are we right now? Right over here. Lady, you said you were long from 90.3, so you were long from right over here on this one currently. And you can see it's still moving around over here. We have, let's see, that's pretty much it on the crude oil. So, all in all, okay, so all in all, it was a good day. We had a good active day on the crude, and we had a good active day on gold, soybeans. There was opportunity on the Russell, on the YM, on the NQ. So, everywhere there was opportunity today. What contract month for crude? We switched. We are now in the GCLG3 contract. GCLG3. Yesterday was the day to roll that. All right. Okay. So, again, I'm going to say, if you have not taken a free trial with us, go to www.cfrn.net/apply, sign up for the free trial. Gold just made a move down. I don't know if any of you guys, any of the partners, got this move down on gold, or anybody that's on the free trial. The entry was right there at 70.6. It's setting up another one right now. Sorry. I feel like I'm back in the live trading room right now. We have bearish divergence, so watch for the green line to turn down and work its way down into the cycle. All right. That will give you some good range on the trade. It's January, I believe. Is that January or February? I don't know. No, it's not March. March is H. I think it's February. And the beans just tanked again too. Yeah, the beans just tanked again too. On the beans, I had drawn this trend line in here a few minutes ago when I started doing this. Right there was a spot to short the beans. Okay, and that's a huge move right there on the beans, from 50 and a quarter all the way down to 39.75. Let's just call it 40 and a quarter. That's the equivalent of a 10-point move on the ES. Another opportunity to short them was right there at 40 and a quarter right there. Okay, all right. This isn't the live trading room. As much as I'd like to just continue trading like this. If you have not taken the free trial with us, go to www.cfrn.net/apply, sign up for the free trial, and you can get into the same type of stuff every morning. I mean, we're up over $3,000 per contract so far this month, and if I'd have just taken the couple of trades that happened while I was doing this recap here, then that we might be up over 4. Anyway, I'm going to wrap it up here. Partners is a partners meeting tomorrow night. Guys on the free trial, you need to be a partner to get into that partners meeting. All right, end of recording.